If you're looking for professional day trading education, a high-level trade analysis, and dissection, you have come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that. Professional day trading education, all here for free on YouTube and on X. And tonight we're going to be going over a couple of trades on one stock, one big trade in total, lots of lessons. Let's get into it. I hope you all had a wonderful day. Give me one sec as I fire up my charts. Let's rock and roll. Okay, so what we had here was and I'm going to go into the one chart because we were specifically watching cues. And on this here, what I discussed early pre-market was a feeler trade. Now, I have a specific video lesson for members coming up here this evening that I'm going to be posting. This first trade resulted in a loss because it is a feeler trade. I don't necessarily care whether it works or not. And what that means is, and I'll give you guys the long and the short of it, these two levels, okay, especially this first level and then coming into pre-market highs, those are kind of your first levels, okay? Now, if it tests one or the other, right, it's going and it fails or does whatever it wants to do, it's going to be a long time before the actual true levels, the levels that we really want, test. So what you have to do is you take a feeler trade. These feeler trades are to be taken with one entry only, okay? That's it, just an initial entry, not multiple entries. I even took the time to go through and say this morning, enter once, not a second time, not a third time, not a fourth time. Don't do that. One single entry. I said that. Now, a lot of members didn't listen, and it resulted in a loss because we had to risk off of pre-market highs. It should have been a very small loss. Like for me, my loss on this initial trade on the short, it comes up into this level, was $932 after it myself finally stopping out on the confirmation break of these highs. Now, members adding in and adding in and adding in just because there is a resistance level there resulted in a much bigger loss, a loss bigger than they were expecting. Because of the hit rate that we have at Trick Trades, traders have a tendency to believe every single trade needs to work. But one of the problems with new and struggling traders is they don't realize sometimes that every trade is not the same, right? When I'm calling something specific, like a feeler trade, it's obviously a different trade. It's like going up to a person named Joe, but you want to call him Bill because you know three other Bills. Do you know what I mean? Like, it's different. It's a completely different animal. So we execute the trade. It wants to just hover. There were signs on SPY as well. We were watching price action. This took a long time for it to finally come in. And I even said that the secondary trade we will trigger at exactly 602. Okay. So into 602, and the high of this was 602.05, I believe. I believe that's what it was. Seems to be 602.07. So as it comes up into that level, I am going to execute that secondary trade with pressure. This was a pressure trade. And even if it did want to come up higher, that's okay. Our risk was very minor, essentially right here. That's all we were giving on this trade, especially on something that rips straight up like that. An absolutely fantastic trade. So the initial trade resulting in a $932 loss, and this secondary trade, because of the potential to come all the way down into the 5 EMA, which it pretty well did. So all the way down, took off my remaining contracts, very small, holding small on that for 275% on my remaining contracts. And a beautiful add up here as well. Just a fantastic trade, beautiful trade, locking in $23,039 on this. Now, I want to zoom in a little bit here for you guys so then we can really take a look at this. Okay, so now that I got the meat and potatoes kind of out of the way, let's get into it. So I want to talk about this trade, this initial trade here. One of the reasons, again, to go back to the beginning, why I'm not interested in adding a bunch of times is because it's so close that because of the range on the day, these pre-market levels, pre-market highs, pre-market lows, and then this level, which is behind a bunch of walls, as well as this. Okay, so that's our first level there, right? It can hold up. It can. But because of the range on the morning, because of that gap up, it's going to choose its real direction. So because we open low, it comes up into that level. We are going to execute the short and risk off pre-market highs. It's a pretty standard issue trade. So if it rejects, it will have no choice because there's nothing else until that 5 EMA, which it ended up coming into later on. Let me check something here. Sorry, guys. I just got to check something. Okay, so we're all good. So on this, if it doesn't reject and it comes up, it's most likely not just going to stop at pre-market highs, but that's our risk. Okay, so we'll risk off of that. If it doesn't, it's coming up into previous all-time highs. That's where it's coming, and that's where it came. That's why the trade plan for the secondary trade was to start in right at 602, coming up into 602. We got our trigger, we executed. Absolutely fantastic trade. Fantastic. Now, if you didn't work it that way and you oversize this, you are not going to be able to execute this. You are going to be too gun shy. Okay. And you basically turned a beautiful, beautiful trade into, a shitty day. And it boils down, one of the hardest things, and we're going to cover this quite a bit on Wednesday during the psychology webinar. One of the reasons why it's hard to get through to people about doing things the right way, the mentality, the psychology, the mindset of trading, the strategy is a very small part of this. But it's hard to get through to new and struggling traders about the psychology and the mentality and mindset. Why? Because, and I've said this saying for years, you don't know what you don't know. So it would be in the same respect as me. If you you've never seen a picture or heard a description of a castle, and I asked you to draw me a picture of a castle, what would you draw? Certainly it wouldn't be a castle. Who knows what that would be, right? If you don't know what it is, you don't know. It's impossible to know. And that's why traders have such a hard time at the beginning with psychology, and they don't realize how important it is. This is what matters. Doing things the right way matters. But when you're new or you're struggling, you still haven't put those puzzle pieces together that it needs to be done a certain way. There's no in between. So when I'm giving direction, like stop out at the break of pre-market highs, it's not working, and only take one initial entry. But you're trying to make money, right? It's about the money because you're adding in thinking it has to work because you saw it reject once. Oh, it's going to reject again. You start telling yourself these lies, and then you snowball. And once it starts squeezing up, you don't size down, you don't take it off. It results in a much bigger loss. And then this is how accounts get blown up. The crazy thing is there's somebody even telling them or telling you one initial entry, very small size. It is a feeler trade. And then for some reason, it doesn't compute. It's because the root of all of this is you are still trading, not to trade well, not to strive for mastery, but to trade for money. When you make anything about money, you'll fail. It is so crucial to people's success that they just follow those directions. That's it. That's all you have to do. Because if you did, this day would have been monstrous. That is 275% potential. This loss here was so minor, or could have been so minor, but because of the oversizing, taking multiple entries, multiple ads, it resulted in a big loss. Probably 3x than what you're expecting. Don't do that. Size back in up here. This is a feeler trade. It's most likely not going to work, but there's reasons why we still take that trade. So if you want to learn how to come do this properly, come to tricktrades.com. If you're still on the fence and you want to attend our psychology webinar, which is day trading psychology, it's not trading psychology, which that's all the psychology you've heard, reading your In the Zone, Trading in the Zone, and Warren Buffett's, all of those types of books. That's not day trading psychology. It's very different. That is trading and investing psychology. It needs to be done different. We need a different mindset and a different mentality as day traders. So join us Wednesday at 7 p.m. East. The link for the RSVP will be down below in the pinned comment. So make sure you have a look, sign up, and I'll see you guys there. It's free for all. And I hope you guys have a wonderful evening. Adios.